This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The volume of oil stored on board ships in Asian waters, which has tripled since September to a 3-year high, is poised to decline as producers of sanctioned oil slow exports and Chinese refiners ramp up buying, trade sources and analysts said. A surge of exports from countries subject to Western sanctions led by Iran and Russia, as well as tepid Chinese buying, left a glut of oil looking for buyers in the world's biggest consuming region. The excess supply has weighed on prices and cushioned the near-term impact from the disruption of exports from Venezuela. A large amount of oil was shipped out in recent months in anticipation of tighter sanctions, said Mukesh Sadhav, CEO of energy consultancy X-Analysts.
Conventional wisdom in the crude oil market is that producers such as OPEC Plus largely determine the price by altering output levels to achieve a desired outcome. That shibboleth was challenged in 2025 by China, which used its status as the world's biggest oil importer to provide an effective price floor and ceiling by either increasing or decreasing the volume of crude it sent to storage tanks. Production cuts in 2022 by OPEC Plus did shore up prices. Those gains faded once it began reversing the cuts in April this year. Now, facing a looming oil glut, OPEC Plus has decided to sit tight and hold production levels steady in the first quarter of next year.
Moving on to the top news in the energy sector.
Indonesia Energy and Mineral Resources Ministry has signed a decree to allocate 15.65 million kilolitres of palm-based biodiesel for its fuel blending mandate in 2026, an official with the ministry told Reuters on Tuesday. Of the total allocation, 7.45 million kilolitres has been earmarked for the Public Service Obligation, PSO, which covers sectors such as public transportation and whose sales will be subsidized by the country's palm oil fund. The non-PSO allocation, which will be sold at the market price, is set at 8.20 million kilolitres, said Enia Listiani Dewey from the Energy and Mineral Resources Ministry.
Mexico is attracting ever more sprawling data centers, but a shortage of renewable energy means big tech is pumping oil, firing up gas generators and using diesel to fuel the global boom in artificial intelligence, AI. The shortfall in green power, despite pledges by industry and government to grow capacity, has overloaded the country's existing power infrastructure and exacerbated local pollution. It's a lot easier to just pump more oil than it is to get an entire industrial-sized solar system built quickly, said Mashika Allgood, founder of All AI Consulting, which informs on the environmental impact of data centers. Next, we have the top news in metal markets. China's exports of refined copper surged in November to their second highest monthly level on record, customs data showed at the weekend, as a price arbitrage made it more profitable to sell metal overseas than on the domestic market. Exports from China, the world's biggest copper consumer, came in at 142,991 metric tons last month, more than double the total of just under 66,000 tons in October and more than 8 times higher than 16,800 in November 2024. As a net importer of copper, China typically does not send large volumes overseas, but a rally in London Metal Exchange copper prices to record highs this year has made exports an attractive option, allowing smelters and traders to fetch a better price than on the Shanghai Futures Exchange.
Iron ore futures prices closed lower on Tuesday, weighed by steel mills undergoing annual furnace maintenance and rising Chinese port inventories. The most traded May iron ore contract on China's Dalian Commodity Exchange traded 0.26% lower at 778 yuan and 50 fen, $110.77, a metric ton. The benchmark January iron ore on the Singapore Exchange was 0.39% lower at $104.35 a ton, as of 0700 GMT.
We will now look at the top news in the agricultural sector.
China will impose provisional duties of up to 42.7% on dairy products imported from the European Union, the latest in a series of measures against EU exports widely seen as retaliation for the bloc's electric vehicle tariffs. The duties, to be collected from Tuesday, will range from 21.9% to 42.7%, although most companies will pay just under 30%. They target unsweetened milk and cream and fresh and processed cheeses, including the iconic French Roquefort and Camembert. China's Ministry of Commerce said it had found evidence that EU dairy imports were subsidized and hurting Chinese producers.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.